Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY and the data sets for April 11th, 2025. And with that said, let's go ahead and jump straight into the data. Now, we had the CPI, this was April 10th. We had the CPI come out today, and the data came out cooler, but the market did not react very well to it. I don't even think the market was really paying attention to the CPI data too much. It was more so just, continuing uh, the selling and everything else. None of the data should have warranted such a major sell-off. Now, China has been selling all of their 10-year treasuries from the USA, so that's been kind of causing a panic within the treasury market. So we've been seeing the yields come in quite a bit higher. As you can see, the 30-year auction came in higher. The 10-year auction yesterday came in a little bit higher. So there's definitely some fear over this China tariff right now. And with that said, the data tomorrow, we have the PPI at 8:30 in the pre-market. And that's going to be probably the biggest data set of the day. Now, very likely it's going to come in cooler since the CPI came in cooler. But we do have the Michigan data coming in at 10 a.m., which we do have a fairly important one, which is like the consumer expectations and the consumer sentiment. We're kind of anticipating those to come in lower, which that should probably lead to a negative market reaction, but honestly not entirely sure right now how the market's going to react to it, just because the market's been so massively up and down. At 11, we have Fed members William speaking. Uh, he might say something important, he may not. I'm not too worried, but we are tracking what the Fed members are saying. So if he does say something important, we will obviously be aware of that. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, we're going to go over the daily chart. And we're going to go over the moving averages and the Bollingers. So just quickly going over our levels, the 5 mile is at 515.87. The market closed at 524.58, which was really nice close still, even though it was a pretty negative day. It was one of the reddest days we've had in the market since like Black Monday. um, But the 5 mile tomorrow should be opening anywhere from the 511 32 to the 513-ish range, give or take. It should pull down slightly, um, but it could technically pull upward a little bit too, um, even though we did close lower, just because we did have a very high close yesterday. It takes an average over the last 5 days, so that could technically pull it up towards the 518. We'll kind of see it open. It's up in the air, but very likely it should pull downward just because the market price did pull downward. Now, the 10 mile is at 535.66. We're still far away from it, but we're starting to get somewhat close to a testing range. We got fairly close to that range actually today, and rejected it. The 20 mile is at 551.04. We're still quite a ways away from that. I'm not too worried about that right now. And the lower Bollinger is at 502.62. So as I talked about, basically the whole beginning of this week, we were digging into that lower Bollinger and we're finally pulling upward. We tested the 5 mile. We did another really good 5 mile test today, and we can't think of the word right now. I'm just gonna say accepted the 5 mile test. So the market bounced upward. that's a very bullish sign. That should be considered a bullish thing. So that's good. But uh, the next thing we should be focused on essentially is if we don't start rejecting in this area, we should be looking right towards that 20 mile. Kind of the same plan as what I talked about yesterday, is that the target right now is essentially after testing the 5 mile, the market is going to either decide to head to the bottom Bollinger or head to the 20 mile. And so far it's heading up to the 20 mile. And we can see that on the ADL as well, which this is essentially the money flow. And the last two sessions, even though today was a large selling session, the last two sessions we've seen a lot of inflow in funds. So that's another bullish signal. Now, closing that, um, what I'm looking for is structurally, and let's see what drawings I got. Okay, so here's what I got for drawings right now. We have the old buying channel, major buying channel, and that was, the previous 2023 rally to the uh, basically the end of the Trump president election rally, you know, end of January basically. Um, Now we have this major selling channel, which has been formed essentially since last last May, June, July, basically when we had that really large sell-off in the end of June, early August in 2024. It created this major selling channel, and we're still, trading very well within that. We were within this liquidity range, which I talked about this in many of my videos. There's kind of multiple liquidity levels in here, and I'm sure there's another big box in here somewhere too. I'll try to identify that over the weekend. I'm not going to worry about that tonight too much, as I want this video to be a little quicker. I don't have a whole lot of time right now, but we rejected this zone, and that's okay for right now. But we should be anticipating trying to build liquidity to break back into this area. And still the same structure we're looking for essentially is that we are looking for that large inverse head and shoulders to fill out. So we're looking for this to pull upward, test in this area, and then, fill liquidity in there. And no, that's not a face, but it kind of looks like one. Um, but once we get back into this liquidity zone, we'll be testing the upper range, the bottom range, upper range, bottom range, until we build enough liquidity within this area to break upward or, you know, break back downward if this is going to be like a large inverse cup and handle. And that's what this, giant line is. It's a large inverse cup that formed, at this large gap right here at the 5 or at the 487 at the 487 mark. And, as I said, we'd start building bullish structure in here, which we did. We built bullish structure and, whether it's due to news or whatever else, but we have pulled out of this area and we've tested upward. And now we're kind of just back in nowhere land. Um, Not so much nowhere land where we did test the 5 mile. We're above the 5 mile, but we're below the 20 mile. So right now, really the market has to decide, are we going to reject and head down to the 5 mile again? And then from the 5 mile, are we going to reject down to the bottom Bollinger again? Or are we going to, um, you know, break away from this 5 mile level, use that as support, head up into the 20 mile, start forming structure in here, start forming this inverse cup and handle, or I mean this inverse head and shoulders right here. And then ultimately that will build a large cup. And that's how we will break out of the selling channel if we're going to break out of the selling channel. Um, we'd build some major structure right in here and very likely reject right in here, form some sort of cup top and then reject in here. build that handle out, something like that, without the squiggle, um, and then have the breakout in there. That's kind of the bull thesis right now. Now, the bear thesis is we're going to start building bear structure in here, like possibly a head and shoulders, but essentially continue that inverse cup and handle out. Whether we build the handle all the way up to the top of that selling channel or whether we head into, one of these other liquidity areas and then reject. But that's kind of what the bears are looking for. Now that we pulled upward, we tested the 5 start looking for bearish structures, and you're going to want to look for these on essentially the um, basically like the 10-minute chart. And I know that's kind of annoying to deal with, but that's kind of just how you find those microstructures. Now, going over the hourly chart really quick, we did have this very bullish double bottom. Okay, and out of that double bottom, we had that major breakout. Okay, that was great. Out of that major breakout, we formed a cup. And I'll try to define why this is a cup in a second, but I'm going to delete this large inverse cup because I don't want that line there. Now, why is this a cup? Because I know some people get confused. Why is this a cup? Uh, if I don't want to reverse that, I wanted to reverse. Hold on just one second, bear with me. Technical difficulty. Just kidding. Anyway, I'm going to explain this really quick, so just bear with me. But because we had buying in here, it needed to be filled with selling. And because it filled, it essentially canceled out this entire structure. And because that entire structure got canceled out there, we maintained that level right there. I know that's not going to make sense for a lot of people, and I apologize. I don't have a lot of time to discuss it. I was discussing it with one of my students earlier, and basically think of this as like every time you see buying, it's green Lego pieces, so they're stacking up. And say this is 5 pieces tall. Okay, so there was 5 green Lego pieces stacked up. Now, to cancel that out, so almost like math, like a negative in math, to cancel out the negative now steps in. So we now need the 5 red Lego pieces to build downward, and that cancels out that entire structure. There's no more Lego pieces there. It's now just a singular cup. So bear with me on that. I'll explain that in better detail another time. But this is what I'm looking for now. I'm looking at this as this is a bullish cup. We're starting to build a handle in here. Very likely build a handle, break out, and head into this larger liquidity zone. Um, that's the bearish or that's the bullish thesis right now. The bearish thesis, as I said, would be to uh, start seeing some bearish structure forming. So possibly a large inverse cup right here. Um, some sort of head and shoulders, whether it's something like that, where, we have the market price pull up, pull down, pull up, and then, reject. Okay, and then that would make that large inverse cup. You're looking for some sort of rejection structure in here that's going to say, that's going to clearly tell you, okay, the market is going to start selling off. Yeah, that's essentially the technical analysis tonight. We have a lot of important data really early in the morning, so I'm not too worried about like any crazy end of day move so much. Now we do have OPEX next week, and it's absolutely put slammed. So take take that with whatever you want to do with it. Um, to me, that's a bullish thing because that means dealers very likely don't want to, um, have all those puts print. Uh, that's kind of the bullish sentiment there is that we're starting to break out of this selling, and very likely for OPEX and starting for this earnings season, we're likely starting to head back upward. We're not out of the woods yet. We're not going to be out of the woods until we see the market price plus all of the supports past this 200 mod level, as that's really like the long-term support. That's the bear market indicator. If we pull above it, that's the bull market indicator. So still deep within the woods right now. But we're starting to, see support pulled upward. And, we just have to take it day by day. But we need the 5 mod to start pulling upward. We need the 10 mod to start pulling upward. We need to test these supports. We need to have the 5 mod test against the 20 mod, cross the 20 mod, then test the 200 mod, and, the story continues. So, with that said, I'm going to end the video there. I hope everyone has a wonderful day. Trade safe and have a great weekend. And I will talk to you in the next video.